8-1, 8-2 kind of go together. And we're going to get into what is more challenging, one of the more challenging sections. 8-1 is a little bit of a review. 8-2 is going to be completely different. 8-1, what we're dealing with is the adjustments column, and we are going to be dealing with 4 accounts. So if you look at part B, we did the adjusting entries, and simply we're dealing with the numbers that correspond with each other. So supplies expense, supplies, insurance expense, prepaid insurance. And we just type adjusting entries here. I put a little bit too much information here, that's why I blacked out the right hand side. And the second part of this is we post everything in the general ledger, which is part C. So you would go down to supplies expense, which is down toward the bottom, type in adjusting entry, debit, debit, supplies, do the same thing. Okay, adjusting entry, credit, we now have a balance of $250. Do the same thing with insurance expense, adjusting entry, debit 300, debit 300, and prepaid insurance, adjusting entry. And notice we do G4, that stands for General Journal, page 4, which is part B, credit, 300, 900 balance. Okay, and that is 8-1. 8-2, on the other hand, is a little trickier. We are going to be dealing with the yellow accounts, and we are going to close them. Okay, so over here I have done that, and you need to do this in this order, and I've color coded this. We are closing the sales account. Sales account has a balance of credit 5511, so we debit sales. Now we're going to use that income summary account, which is 5511, and that's where we put it as a temporary account. Then we're going to close the sales account, or the expense accounts, I'm sorry. Expense accounts have a debit balance. Therefore, we have to credit them. Remember, we always had the debit on top. So when you do this, you're going to do the credits first, add them up. That's how I get 2181. So these 4 numbers added together equal 2181. The next thing that we close is the income summary account. You can find this number a couple different ways. Number 1, net income. I have it highlighted here. The net income number is the income summary account, or you can simply subtract these 2 numbers, and 3330 is your income summary number. Darlene Wong Capital is the credit number, 3330. That's where we put that number where we made money. Okay? Net income, we debit income summary. Net loss, we credit income summary. And then the last account that we're going to close is drawing. Drawing is going to be credited because it's like an expense, and capital is going to be debited. Capital is a permanent account. Drawing is a temporary account. Expenses are temporary accounts, as are sales. Going back to part A, our cash, any of our assets, liabilities, and capital are going to be permanent accounts. The rest of them are temporary and are closed. So just as a review, we did the adjusting entries, which corresponds with the green. Then we did the closing, which I've color-coded, sales, expenses, income summary, drawing. And that is 8-1 and 8-2 to begin what we're going to do in Chapter 8.